Welcome to This Explainer. Today, we're breaking down a real strategic roadmap to build your financial safety net even if you are literally starting from absolute zero. I'm so glad you're tuning in because we're tackling one of the absolute most foundational concepts in personal finance, and we're going to make it highly actionable for you.
I want you to imagine waking up tomorrow morning, looking at your bank account, and knowing with 100% certainty that you could survive half a year of living costs without taking out a single loan. For a lot of people, that sounds completely impossible. But today, let's dive into how we can make that exact scenario a reality step by step using practical strategies. Here is our blueprint for today's explainer. First, financial emergencies can happen. Second, the first savings milestone. Third, strategic steps to grow. Fourth, real results with Emily's story. And finally, achieving long-term peace.
Section 1, financial emergencies can happen. We've all been there, right? And unfortunately, they rarely give you a convenient warning before they strike.
Now, we really have to draw a hard line between true survival needs and, well, lifestyle spending. A sudden job loss, an unexpected medical bill, a major car repair, or critical home maintenance, those are emergencies. Vacations, holiday shopping, or your everyday splurges are definitely not. You have to draw a strict boundary here to protect your savings. So what actually is an emergency fund? Basically, it's money set aside specifically for unexpected expenses when life throws you a curveball. Think about this. With nearly half of Americans unable to cover a surprise $400 expense without swiping a credit card, having this dedicated reserve, it's basically your ultimate stress relief tool. Moving on to Section 2, the first savings milestone. The absolute most crucial part here is just getting started, and you do not need a huge salary or a lucky break to do it. Listen, instead of stressing over saving thousands of dollars right out of the gate, which honestly can totally paralyze your progress before you even start, your realistic roadmap begins with hitting this highly achievable first target, $500 to $1,000. That's it. That is your day one objective. Why keep it so small? Well, hitting that first few $100s proves to yourself that you can actually pull this off. Reaching this initial milestone creates immediate momentum and real financial confidence. It starts building the exact disciplined habits you're going to need to keep going. All right, Section 3, strategic steps to grow. Let's get into the actual mechanics of how this builds over time. Before you can aggressively grow that fund, you have to calculate your baseline by adding up your essential monthly expenses. We're talking housing, utilities, daily living basics like groceries and transportation, and those non-negotiable obligations like minimum debt payments and insurance. You need to know exactly what it costs to keep your life running if your income just completely stopped today. Okay, so your action plan for growth really comes down to 3 steps. Number 1, automate transfers every single payday. Number 2, separate your savings into a high-yield account. And number 3, cut unnecessary expenses, like those unused subscriptions. Put the money out of sight automatically. That way, it earns interest and totally removes the daily temptation to just spend it.
Now, beyond your regular automated savings, keep an eye out for occasional boosts to really accelerate your progress. This means pouncing on tax refunds, work bonuses, or extra side hustle income. Whenever you get a windfall from one of these sources, redirect at least a portion of it straight towards your savings. It'll help you reach those goals so much faster. It is so important to remember this mindset shift. Every dollar saved brings you one step closer. Really, even small amounts add up to a massive buffer over time. You are literally building an architecture of financial resilience brick by brick. Section 4, real results with Emily's story. Let's look at a practical, real-world example to prove that this strategy works perfectly for everyday people. Meet Emily. She earns $52,000 a year and started her emergency fund completely from scratch. She didn't sit around waiting for a massive pay raise or some big inheritance. She just started executing the exact roadmap we've been talking about. Watch this magic happen over time. On day 1, Emily simply automates $40 per paycheck into savings. Simple enough? By week 2, she cancels 2 rarely used subscriptions and banks that cash, too. Then in month 4, disaster strikes, an unexpected $900 car repair. But look at month 5. Because of her fund, she pays in cash, totally avoids high-interest credit card debt, and calmly continues rebuilding. See? Small, consistent sacrifices completely neutralize what would have otherwise been a total financial crisis. Emily's story proves a really vital rule here.
Consistency matters far more than starting with a large amount of money. Her victory over that car repair proves that patience and small, automated steps are the real secrets to financial security. Which brings us to Section 5, Achieving Long-Term Peace. Once you've conquered your first few emergencies, it's time to look at the grand vision for your financial life. Your ultimate long-term vision should be expanding that fund to cover 3 to 6 months of those essential living expenses we calculated earlier. That right there, that is the absolute gold standard of financial resilience. But a quick word of warning as you build this out, emergencies are totally unpredictable. If you actually have to use your fund, do not feel discouraged. Using the money is exactly what it's there for. It did its job perfectly. Just start rebuilding your balance as soon as your situation stabilizes. An emergency fund provides profound peace of mind, protects you from unexpected life setbacks, and prevents a toxic reliance on high-interest debt. Ultimately, establishing this financial architecture isn't just about managing your money. It's about buying yourself permanent freedom from stress. Thank you so much for joining me for this explainer. You now have the exact roadmap to build your safety net. But I want to leave you with one final question to chew on. What's your first emergency savings goal going to be? Think about it. What could you accomplish in your life, your career, or your relationships if you were never afraid of an unexpected bill again? Take that first step today, automate those savings, and I'll catch you in the next explainer.